earnings matter, maybe more than we thought they did, because we thought everything was driven around the Fed. But the numbers we've seen lately, especially with some of those old economy industrials, have been super impressive, and that has really powered things.
And with banks, right? Yeah. So mostly the bank's credit quality has been really good. So as you say, the value stocks, the more cyclical names, they're coming in okay, whereas the new economy surprisingly came in poorly, but kind of didn't matter, right? The market powered through. So the Fed and jobs really are highlighting what I'm looking at this point, just given that we've gotten through most of earnings, and they were pretty good.
Yeah, okay, so the Fed is here, and yes, everybody did well for the month, but the NASDAQ up almost 4%, the Dow up almost 14%. I'll take the old economy versus the new. What do you expect to hear from the Fed tomorrow, and what matters? I mean, tomorrow I think we've all baked in 75 basis points, but what do they do next?
Yeah, if something comes in other than 75, then that'll be news.
Shocker,
but,
right?
I don't expect that to happen. Look, we're all looking for clues, right? It's like Powell's Professor Plum in the library. I don't really know what the market expects, but I believe that the inflation figures we've been getting across the world are on one hand, and on the other, the two-handed economist, on the other hand, is really all over the world. In a lot of places, central banks are already beginning to slow. And that dynamic is real. The latter is really what's been powering markets over the last couple of weeks. I expect the Fed to be a little bit more on the job, a little bit more Volcker, a little less Burns.
I think that too, but what's that do to things like the dollar? What does that in turn do to multinationals? Yeah,
strengthens the dollar, certainly challenges earnings from that front. I don't think the market really, I think correctly, discounted some of the multinational earnings vis-a-vis dollar strength. Is sort of looking at, we're now at the point where people really are looking at balance sheets and the underlying strength of those balance sheets. And yes, FX can add or subtract, but it doesn't really comment on the company's overall strength. So the dollar will matter for other reasons, but not necessarily for earnings.
We had the CEO of Paychex on earlier this morning, and he talked about, at least when you look at small and mid-sized businesses, the data they are seeing is that these employers are trying like heck to hold on to their employees. They're not seeing layoffs like you're seeing at some of the big major corporations. And that tells a pretty interesting story about what's happening in the jobs market, too.
I think that every employer has a little bit of whiplash, right? We went from let's try to keep employees to we have to try to keep employees, and in other words, pandemic, let's keep everyone safe, to let's make sure, we can hold on to talent. The war for talent was the conversation, the massive conversation 6 months ago, 9 months ago. Now it's, hey, let's try to steady our business, understanding that the jobs market might be softening somewhat.
I know FANG is kind of a thing of the past. You have your own new acronym for this, MAMA.
Right. I was laughing as we saw the earnings come, and you're sort of seeing investors go, oh, MAMA, MAMA.
Look, what is it? That's Microsoft, Apple, Meta, Amazon. Who am I forgetting? Alphabet. Is that it?
That's it. I mean, Netflix to me is really not a company that I would look at as a bellwether. But those are enormous cap companies with great balance sheets. But obviously, they're not as acyclical as we thought they were.
Would you touch them?
Yeah. I don't think it's mama. I think the word I use starts with mother for the market that we've seen. What did you make of that GDP number on Thursday? The previous 2 quarters skewed because of inventories.
Right.
This quarter skewed positively for whatever reason. So what does the economy look? Is it at 0? Is it at a half? What have we been averaging in the last 3 quarters in real terms? A half, 1%, something like that?
I mean, that's what the math will say. I look at the underlying numbers, and it looks slowing to me, not accelerating.
Then why do they need to be more Volcker than Burns?
Because inflation is massive, and they need to get to a point. They need to get to a point where investors actually believe that they're going to be on the job in inflation.
So slowing the economy even slower than the 0.5% we just talked about, that cures inflation?
It's going to cure the jobs market in particular. The Fed needs to cause pain to break inflation. That's the reality, and it's a real challenge. That's a political and economic
no
challenge.
supply side answers. Nothing that actually help the supply so that inflation comes down.
That doesn't work as quickly.
It doesn't work as fast. And actually, we're in a political cycle, not necessarily a 2 or 3 year economic.
You can cure disease by killing the patient.
No, but he's right. I mean, I saw
you can
really
cure disease by killing the patient too.
Well, you want to make sure that you get rid of all the cancer without leaving any floating around.
The underlying economy is resilient.
Again.
It is resilient, not necessarily in the context of positive GDP.
You sure this employment picture isn't just the aftermath of a once in a century pandemic?
It partly is.
And then we were at what, 25? Now we're at we're 65 back in the office. We're going to get back up to 75. It's slowly coming back, isn't it?
It is. I actually don't think that the underlying employment or economic picture is so different from 2019 or 2018. It will take a while to get there, but the idea that demographics, et cetera, are so
and we had 2% inflation then, less than 2%.
And 3.5% unemployment.
But once it starts,
expectations are the problem today.
Shepard Smith here. Thanks for watching CNBC on YouTube.